US stocks and more risk-sensitive currencies are weak ahead of Donald Trump's Liberation Day of tariff announcements. Gold jumps to yet another fresh record high. China's factories are bracing for tariffs too. Australian bank lending is steady. And New Zealand's businesses are not so worried about tariffs. That's coming up in our 5 Things in 5 Minutes on Tuesday, April the 1st. And then in today's bonus deep dive interview, China economist Vicky Xiao takes a closer look at the idea of a Plaza Accord-style deal on semiconductors between Taiwan and the United States, similar to the one done in 1986 between the United States and Japan after the first Plaza Accord.
Taiwan's semiconductor industry is estimated to contribute around 40% of its export and 20% of its GDP. Any shock to this industry would have a more severe impact on Taiwan's economy compared to its peers.
But first, in 5 and 5 with ANZ, gold jumped another 1.4% overnight to a fresh record high of $3,160 an ounce. Here's ANZ commodity strategist Sunny Kamari to explain.
So apart from mounting fears of a broad global trade war and escalating geopolitical tensions in Europe and in the Middle East, what has changed in the last few weeks is the growing fears of slowing economic growth in the US, which has led to a sell-off in equity markets and the US dollar. As a result, investors are moving their funds from risky asset to have a real asset like gold.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was down 0.25%. The Nasdaq was down 1%. The US dollar index was up 0.2%. The Australian dollar down 0.7% at 62.44 US cents. The New Zealand dollar down 0.8% at 56.72 US cents. The US 10-year bond yield is down another couple of basis points to 4.24%. And the oil price up more than 3% overnight to $71.62 a barrel for West Texas Intermediate. Number 2. Sunny says the flows of retail investor and pension fund money into exchange-traded funds, or ETFs, are also a factor in gold's rise. Demand had been lower for ETFs since 2021 because of higher interest rates and rallies in stocks, which made other assets more attractive. That has turned this year, she says.
ETF flows really picked up from February, especially from Western investors. So gold holdings have increased by more than 120 tons since February after nearly 4 years of consecutive outflows. We expect this trend to continue this year as holdings are still 20% lower than historic highs of 2020.
Number 3. Australia's measure of bank lending to the private sector rose 0.5% in February. Perhaps surprising, given the RBA started cutting rates that month, says ANZ Australia economist Maddie Dunk.
This was steady, and we saw a steady pace of growth for owner-occupier housing and also investor housing, suggesting that the RBA's rate cut in February did not flow through into the pace of housing credit growth in February, and that is despite the fact we did see increased action in the housing market in February, including a lift in capital city housing prices, particularly in Sydney and Melbourne.
Number 4. China's official survey of purchasing managers for March, or its PMIs, found expansion in the month, which was slightly above expectations. But ANZ senior China strategist Xiao says Trump's tariffs are having an effect under the surface.
Behind the PMI headline is the fading outlook of factory. In March, factories were not only destocking at lower prices, but also cut their purchase of raw materials, including imports. We expect the growth momentum to slow a bit in the next couple of months. Additional policy supports will be needed to offset the U.S. tariff shock. We believe the policymakers will cut required reserve ratios, the RRR, without hesitation if the U.S. tariff the 2nd of April is big.
Number 5. New Zealand business confidence in March was mixed according to the ANZ Business Outlook survey released yesterday, but pricing intentions did warm up a bit, and businesses said they weren't that worried about global tariff action, says ANZ New Zealand chief economist Sharon Zollner.
We decided to pop a question into our survey asking firms what are the most important factors driving your investment decisions at the moment. And that geopolitical and tariff uncertainty was cited by a few firms, but only about 3%. And it also will have undoubtedly fed into those who said that the global economic outlook was important, which was over 10% of firms. So it is a factor, but by far the most important factor is the domestic economic outlook. And what we've discovered over time answering this question, asking it in booms and busts, is that it's always the economy is stupid.
Sharon Zollner there. Now, in today's bonus deep dive interview, Greater China economist Vicky Xiao takes a closer look at the idea of a new Plaza Accord-style deal on semiconductors between Taiwan and the United States, similar to the one done in 1986 between the United States and Japan after the original Plaza Accord. Vicky says there are two reasons America wanted that version of the Plaza Chips Accord in 1986.
First, alleged dumping practice from Japan, and second, limited access to Japan's domestic market. As a result, this agreement secured 20% of Japan's domestic market for foreign companies and set a company-specific price floor for Japanese semiconductors. This had a significant impact on both companies' semiconductor industry and supply chains. First, the U.S. manufacturers boosted their market share and eventually regained first place with a 43% share of the global semiconductor market. For Japan, the price-setting mechanism and appreciated yen after Plaza Accord have weakened the competitiveness of Japan's semiconductor companies. In addition, the competition between the US and Japan also presented opportunities for other players entering the market, such as Korea, Taiwan, and mainland China.
So what effect might a Plaza Accord for Chips version 2.0 have on Taiwan's chip sector and its economy?
Taiwan's semiconductor industry is estimated to contribute around 40% of its export and 20% of its GDP. Any shock to this industry would have a more severe impact on Taiwan's economy compared to its peers, as Taiwan's semiconductor exports to the US only accounted for 4.5% of its total semiconductor exports in 2024. Direct tariff on Taiwan semiconductors from the US might have a limited impact on Taiwan. However, if the US imposed tariffs on products containing Taiwan's chips, the impact could be significant. The additional 20% US tariff on imports from mainland China will have a spillover effect on Taiwan's semiconductor industry. In 2024, Taiwan exported 52% of its semiconductor chips to mainland China and Hong Kong, which accounted for 18% of Taiwan's total exports. The potential sales drops in ICT products such as computers and mobile phones in mainland China will reflect on weaker chip export for Taiwan.
So how's that affecting your GDP forecasts, and how do you think Taiwan's government might react?
We saw our Taiwan GDP forecast 3.2% in 2025 is subject to a downside risk given by the tariff uncertainty. To mitigate growth risk, CBC is likely to maintain steady interest rate to support the economy's resilience.
Vicky Xiao there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, April the 1st. Catch you tomorrow with whatever detail we can get on tariffs from Donald Trump on his big announcement day, a day he has described as Liberation Day. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.